Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, you name it, all over the world of crypto and blockchain. And today I have another amazing guest. All my guests are pretty amazing. The season's been incredible. I have the CEO and founder of Realm Insurance, Joseph Ziolkowski. Joseph, welcome to the show.
No, thanks so much for having me. Great to be here.
You're very welcome. You're very welcome. So, yeah, let's kick things off, and I'll ask you the first question: Is this
Bring it on.
what is your background? And it is a logical background for what you're doing now.
Yeah, well, I think my background. It's funny because the idea of insurance meshing well with something as innovative and bleeding edge as what's happening in the distributed ledger space, I think, isn't the most obvious connection. But I've spent almost 15 years in the insurance industry, and I was fortunate that I got my start in insurance working really within a very kind of specialized niche that's referred to alternative risk transfer and alternative risk financing transactions. So the global insurance marketplace, it's a very large, big, sometimes opaque marketplace that's occupied by some of the biggest balance sheets in the world. But for really complicated transactions or for companies seeking outcomes that just aren't well accommodated by the traditional insurance marketplace, they bring all these challenging and complex, problems or things or objectives to the alternative risk transfer, alternative risk financing niche of insurance. And so I spent nearly a decade in the alternative side of the insurance industry, setting up insurance and reinsurance infrastructure, creating products, putting third-party capital to work to create alternative reinsurance capacity. And so while my foray into blockchain wasn't, an immediate link to my insurance experience, I spent so much of my initial time using insurance infrastructure to solve problems for non-standard risks. And then fortunately, back in 2017, I bought Bitcoin for the first time. And, candidly, my interest in Bitcoin at that time was purely speculative. But I had a really kind of serendipitous engagement on the insurance services side of things to set up a captive insurance company, right? This self-insurance vehicle for a US-based digital asset custodian. And this company was well run, it had good funding, they cared about compliance, but they needed an insurance product that provided a source of financial recovery across the different exposures arising from digital asset custody. And they couldn't find it anywhere in the market. And that was really the first time that I was able to link, my insurance and finance background with the really, I think, growing demand and need for regulated insurance products for companies operating in the global crypto space.
Very cool. Yeah.
Yeah.
I don't know if you did any research on my background, but I worked in insurance for 20 years.
Oh, cool. What
Yeah.
part?
Mostly AIG.
Oh, I got a few board members and senior advisors from AIG.
Very cool. And then a little bit at Excel Group and I worked in Bermuda, where your company's headquartered, right? So
Yeah, no doubt. Wow, that's awesome.
yeah. So let's talk about your company. Let's talk about Realm Insurance, right?
Yeah.
What are you all about? What makes you a game changer?
So, after I had that, I think, really important window into the challenges these companies were facing, finding insurance support, and I've developed kind of a keen sense of understanding, as anybody has who's worked in the insurance industry for, a decade and a half, of what the insurance industry does well and what it doesn't do well, right? And one of the things that's challenging for the insurance industry, right, is that it's a very backwards looking industry. It chews on a whole bunch of historical data to predict the future, right? Insurance is all about finding an adequate price for the future anticipated losses that could arise. And if you don't have the historical data to base those predictions on, the insurance industry as a whole seizes, right? It almost comes to a screeching halt. It's a conditional avoidance mechanism for non-standard things. But while that's generally the way that insurance works, it doesn't mean that insurance can't respond adequately or appropriately to new and emerging risks. And as we were kind of diving deeper into the growing momentum of really credible things that was happening within the digital asset and blockchain space, it was very clear that in order for these companies to scale, right, in order for these companies to have credibility, to stand up in front of traditional financial or traditional tech institutions, they were going to need insurance. And I think one of the really important acknowledgments, not just for me, but for really everybody that's joined Realm, is the belief that, you know, the technology that underlies the digital asset marketplace, right? Distributed ledger technology. It's good technology, right? It's designed to bring transparency. It's designed to bring disintermediation. It's designed to bring accessibility, right? These are all things that can enhance so many different industries in the way that they transact. And if we believe that to be the case, and we see the value of the products and services that companies are building on top of this technology, then we need to make sure we position ourselves to provide the requisite support. And, you know, for your listeners who don't understand how the insurance industry works, you know, it can be categorized into, you know, two categories of operators. You have intermediaries, right, that are responsible for finding operating companies insurance. They're not risk takers, they're merely brokers in the transaction of insurance. And then the other category of operators are the capacity providers, right? The insurance companies who are actually retaining the risk arising from, you know, these different companies. And the interesting thing is, if you don't have any willing capacity providers, right? If you don't have any insurance companies that are willing to take the risk, no matter how great of a broker you are, you can't find insurance products and solutions that are going to be good for your insurance, right? And so when we were sitting here looking at how do we solve this growing dislocation, right? This demand for insurance products and this corresponding void in capacity, we knew we either had to be an intermediary or we had to be an insurance company, right? And if we go back to the initial point of realization, you can be a great intermediary, but if you have no insurance company partner, you're stuck in the starting blocks, right? And so by process of elimination, we knew back in 2018 that we wanted to be a part of the solution, right? Of not just enabling companies within this sector to scale and build credibility, but also to bring an element of resilience to an evolving ecosystem that we saw a ton of potential behind. And so we decided to launch Realm Insurance as an insurance company, right? And a really important part of that journey was domicile selection, right? Which jurisdiction did we believe would actually give us not just an important, credible regulatory framework, but a genuine understanding of the problems that we were looking to solve. And, you know, Jamil, with your background in the insurance industry, you can imagine how some of these conversations went with regulators in US and non-US jurisdictions about the idea of getting a license to insure companies the rest of the market wanted nothing to do with. You know, some of those conversations were pretty short, but we were fortunate to land in Bermuda, which is a great jurisdiction, not just because of all the interesting and really important things that have happened in Bermuda from an insurance market standpoint over the last 40 years, but as you know, they were one of the first jurisdictions to pass a legislative framework for regulation of digital asset businesses back in 2018.
Bermuda's a great domicile. So, you know, I mentioned AIG, they started in China, you know,
Right.
US is always the last place to go, you know, in my opinion, but, you know,
Yeah. No, I hear you.
but I
But yeah,
hate, but
so the idea was really, you know, if we could get Realm positioned to provide aligned insurance products, right, and build a team of underwriters that genuinely not just appreciates the technology, but understands the technology and the business models, right, and the ways that these companies were looking to generate revenue. You know, notwithstanding the fact that we didn't have historical data to leverage in terms of pricing and underwriting insights, we just knew that we had to take a bit of a different approach to underwriting risks. And that was really just deep engagement with these companies through our brokers to understand the qualitative and quantitative aspects of their business. It's really kind of ground up underwriting. You know, how does the company position financially? How is the management team? how do they feel about compliance? Are they regulated? Are they unregulated? What is their funding, right? And as we went through each one of these underwriting exercises, we were able to do something that's really important in insurance, which I know you can appreciate, right? It's categorizing good risk from bad risk. And it was those, one underwriting initiative after another, dealing with one company after another, that we were able to really develop a huge appreciation for how quickly the ecosystem was evolving, but also to ensure our products were keeping pace with and providing relevant coverage for these different but really important exposures.
Very cool. So let's talk about your product suite, right? What products do you offer right now today, and what are the benefits of them?
So we offer an increasingly broad suite of insurance products. I think the most important ones for companies operating in the sector right now come in somewhat of a traditional form: directors and officers liability insurance, professional liability, cyber crime, right? So if we just walk briefly through each one of these coverages, if you think about any company that needs to raise capital, right? Need to raise capital. These companies are going to need to have independent directors on their board. There's going to be stakeholder pressures. There's going to be concerns regarding liability. It's almost impossible to scale a really credible company raising institutional capital without directors and officers liability insurance. And so we knew that not only would we have to get comfortable with bringing a great D&O product to market, but we would also want to make sure that we could expand the scope of coverage for securities claims to include claims arising from token issuances, right? That was one of the first major iterations of our D&O product that differentiated significantly from the market. When you look at something like commercial crime insurance, right? This is coverage for things being stolen, either by your employees or by third parties. In the traditional sense, commercial crime covers money and securities. We knew in order for our product to be relevant, it would have to cover the full spectrum of exposures arising from digital asset custody, right? So cold storage, hot storage, using MPC and HSM based custody solutions. So those are just a couple of examples of the types of traditional products that we've heavily modified to really find aligned support for companies operating in the digital asset space. And then, on the more innovative side of things, we've recently just launched a suite of Web3 tailored products. One of those products is called Aura, which is a slashing insurance product. And we've developed slashing insurance in a variety of different forms, some of which are cross-protocol, but Aura is Ethereum focused and gives us the flexibility to provide coverage denominated in fiat and in Ethereum, right? So we can issue this coverage, in the traditional sense for companies seeking a source of recovery in US dollars or pound sterling or CAD, but also we have the ability and the license in Bermuda that enables us to interact in a currency that's much more aligned with the exposure. And in this case, Ethereum, if that makes sense.
It makes sense. So Aura is regarding your venture with Cybers, or is that different?
Yeah, so Cybers comes in on our Vista product, right? Vista is our Web3 tailored commercial crime policy, and as you saw, the ability for us to interact with Cybers gives us the ability to enhance our insurance product by not just being reactive in the form of paying out when there's a covered loss, but actually providing preventative capabilities. Threat monitoring, issuing alerts as we're able to scan wallet addresses and smart contract addresses for malicious activity. And so really the important aspect of this partnership with Cybers is not only does it enhance our insurance product by incorporating technology that's very aligned with the types of companies that we're insuring, we're also using really important technology that's keeping pace with, or nearly keeping pace with, all of the malicious actors out there using these different threat vectors to try to abscond with people's digital assets.
I want to see you succeed there.
What's that?
There's there's still, I think, this is my point of view. I think it's still a stigma as far as institutional, view of crypto and blockchain, that you see a lot of, suspicious approvals and blackmail and rug pull and
Right.
transfer attacks and bridge attacks. How can companies begin to feel comfortable with you and with insurance and with, crypto, and remove and have these things that are major threats today not be as threats going forward?
Yeah, I mean, it's a great question. I think when you look at the types of issues, that you referenced, these are some of the, without being dramatic, these are some of the biggest issues in the evolving crypto ecosystem today. These are the types of things that compromise the credibility of participating in the crypto ecosystem, right? So when you look at institutional appetite, I think, a lot of institutions probably in a vacuum would agree the ability to generate fixed income type returns of double-digit percentage points is a really cool idea, but the vulnerability that comes with participating in the space it's extremely difficult to manage. And so I think the first thing is acknowledging that these types of this type of activity is not just compromising to the the participants that are currently interacting in the space, but it's compromising the adoption of a ton of capital that's sitting on the sidelines. And while I think, if the question is how do you stop the activity, I think that's a much more difficult question than how do we mitigate the chance of loss arising from this type of activity. And I think when you look at technology, right? Technology has to be part of this solution. AI-driven analytics, monitoring tools that enable us or participants to monitor and see this type of activity happening in real time, right? And so when we look at the idea of really wanting to build or participate in building a credible kind of emerging and innovative ecosystem, we know that not only do we need to provide a source of financial recovery, but we need to be using the technology that's going to help try to keep pace with these bad actors as a way of ensuring Realm maintains profitability, but also as a way of assisting and supporting a lot of the companies that we insure with threat monitoring capabilities through the different types of technology that Cybers offers.
Got it. So yeah, there is a distinction between stopping it and mitigating it, right?
Yeah.
What's the future look like? Is the future mitigation, or is the future using technology to stop it altogether?
I mean, I think it's always going to be a combination of the two, right? I mean, if you look at the idea of, one of the vulnerabilities we've been talking about lately is, the ability to provide threat monitoring for public mempools, right? Where you've got these transactions that are getting posted, they're available to the different nodes or individuals that are participating within these different networks. And that's great because those public memory pools are transparent. So if you see the bad activity taking place in these public mempools, you can see it and you can avoid it, right? But oftentimes some of this malicious activity is taking place in private mempools, and it requires a different type of monitoring that puts you in a position where you have to acknowledge that you can't avoid loss, but you can potentially mitigate the amount of loss that's ultimately sustained. So I think, that idea of, number one, being comfortable with the fact that this type of activity is likely always going to persist, makes it easier to be committed to trying to find partnerships, internal, external support for ensuring that we remain as up to date on how to go about treating this type of really dynamic exposure.
Got it. Thank you. I had to ask the follow up, so appreciate it. So,
Yeah.
I want to shift gears a little bit. Okay. You recently opened an office in the Middle East, right?
Yes.
Uh, can you tell us about the decision to expand into the UAE market? Um, you know, please.
Yeah. So, one of the things that's, and again, it's great that you've got the context for operating in the insurance industry because, there's thousands of different insurance companies and there's, hundreds of different insurance products. But as I was mentioning during the beginning of the conversation, oftentimes these products are pretty traditional and they're designed to support companies that are operating in a pretty traditional manner, um, which which presents a challenge for the way that we want to operate, right? If you look at our vision for Realm, in addition to all the support that we've provided to companies operating in more than 40 countries around the world, across the entire cross section of the crypto and blockchain marketplace, our vision for Realm is making innovation resilient, right? This is an idea that we are going to and can galvanize this company around our products, our underwriting philosophy and appetite for the next decade, right? But in order for us to actually be able to execute on the idea of making innovation resilient, we need to reduce our reliance on third-party service providers within the insurance industry, right? So, for example, if we want to write business in the Middle East without us having a regulated presence there, we would have to find a local insurance company that's comfortable insuring the types of risks that we're insuring, comfortable with our products, comfortable with our underwriting methodology. And it's a difficult proposition, right? So instead of waiting for the market in the Middle East to accommodate the types of risks that we want to insure, the idea is that we take a more strategic step. We obtain our own licensed and regulated footprint directly in that region. And that allows us to make our capacity as accessible as possible to a region of the world where we see a ton of momentum, right? There's a ton of capital flowing into the Middle East. There are a number of companies that are launching or establishing branches across the crypto ecosystem in the Middle East. And so for us, it's an opportunity to maximize the accessibility of our capacity and products for the types of companies that we really want to insure.
Got it. So you're choosing, yeah. When I think of Middle East insurance, for some reason, I have this in my. I always think of like also being Sharia compliant, right?
Right.
And how do you make crypto Sharia compliant is the question no one's been able to answer yet.
I think it's a great question. We've had limited discussions on that front, and I think it's one of those things where we'll cross that bridge when we come to it. We've fortunately found a ton of demand for really interesting companies, some of whom are well known, some of whom are, I think, certainly at the very early stage of the spectrum. But one of the marks I think of our value proposition outside of not offering Sharia compliant insurance products is really the ability to maintain a really high level of relevance for the products that we're issuing in the different parts of the world that we write business.
Got it. So, I wanted to ask this question. So thank you. I wanted to ask regarding, Bitcoin. You said you got into Bitcoin 2017. So miners, face problems too when it comes to getting insurance, right? So
Absolutely.
how do you address those issues, regarding the Bitcoin miners, and how do you think it's going to grow from here?
Yeah, I mean, we can have a 2 hour long conversation on the different types of challenges faced by Bitcoin mining companies and the ways that some of those challenges could be solved in part with aligned insurance products. So, for starters, our entry point to providing insurance solutions for companies operating in the mining space really took place back in 2020 and 2021, where a lot of these mining companies were trying to secure financing to purchase mining equipment, right? And they were turning to non-bank lenders, and these lenders were willing to extend an amount of financing at oftentimes really high interest rates, but they all used the ASICs or the Bitcoin miners as security for the financing, right? And the way that the lender got comfortable with the underlying security was only if it was covered with property insurance, right? The lender mandated that the mining companies purchased an adequate amount of insurance on the actual mining equipment itself. And if those miners could secure that insurance, it enabled them to close these rounds of funding. And so our first engagement with companies in the mining space really was specific to our appetite in providing different types of insurance solutions to cover, what's in the insurance world is known as electronic data processing equipment, EDP. But of course, for the mining community, it's any one of a number of different, mining equipment models specific to mining Bitcoin. And then you look at more innovative stuff like the immersion mining that's taking place, right? The idea of taking this mining equipment and then submerging it in some form of liquid to help with cooling and build efficiency, right? You can imagine a lot of traditional property markets aren't really ecstatic about the opportunity of providing millions of dollars worth of coverage to these data centers that are submerging all of their equipment in different types of liquid. And then you take it a step further and you look at the exposures that some of these companies face with the sometimes rapidly fluctuating hash rate and the impact that those fluctuations have on the earning capabilities of these miners, right? And that kind of takes the form of certain types of derivative contracts that have insurance type impacts. And so we really look at that full range of exposures, ranging from kind of property-oriented exposures, liability-oriented exposures that arise from using other people's mining equipment to generate Bitcoin, all the way through to financial exposures arising from just the way that their business models operate.
Got it. So for some people may not know this, there's a big difference between life insurance and P&C, property
Yes.
casualty. Property casualty is a spread business. We're talking about that, right? Well, I'm going to ask you your life insurance question maybe later. One of the biggest pain points to remember when I worked in the P&C side was this concept of IBNR, which is not reported. And you just mentioned derivatives. Now, the crypto market is $2 trillion in market value, but the derivative value is a heck of a lot more. And you have your product of, your criminal product. How do you deal with IBNR in your product suite, because it is a huge unknown?
Yeah, I mean, so this idea of incurred but not reported, right? And I think for any of your listeners that have the slightest of inclination into how the insurance world works, you're right. This is one of the most critical pieces of the way that insurance companies remain solvent, right? Incurred but not reported is really this. It's kind of I want to say it's a combination of an art and a science where typically a team of actuaries looks at the evolving exposures from the portfolio of insurance products that have been issued to your portfolio of insureds and tries to arrive at some determination of the value of future loss expected from the different types of products that you've issued. And it's somewhat of an unsexy answer, but we use a lot of traditional actuarial methodology to just continue to run models and simulations over the types of products that we've issued. And I think one of the ways that we have put ourselves in a position to manage the future expected loss is just by being very careful with risk selection, being very careful about the volume of limits of protection that we offer through our different insurance products. And when you come to a really, I think, important point of sensitivity for a lot of insurance buyers in this space, right? Some of the people who are potentially listening to this podcast now, there's a lot of, I think, sensitivity toward pricing, right? Why is insurance for companies operating in the crypto and Web3 space so much higher than similar coverage would be for traditional financial institutions? Well, there's a heck of a lot more volatility. There's a heck of a lot more variability. There's, regulatory, concerns everywhere you look. And so when you think about what an insurance company is doing, they are trying to charge an adequate rate for the future expected frequency and severity of loss. And so when you're trying to value your book of reserves or exposures in the future, it really comes down to building models that are continually evolving, just to ensure that we can continue providing the support that we're providing.
That makes sense. That makes sense. Yeah. So I mentioned briefly life insurance. I know there's not a lot of products out there in the market for to help people with life insurance, but investing and trading crypto is a high stress event, for most people, right? What do you think? Is there a need for life insurance for crypto traders and investors? What are your thoughts on that?
Yeah, I definitely think there is. And, if you look at, there's a type of insurance product that's called private placement life insurance, right? And this is kind of a high net worth, ultra high net worth solution, but and I think it's particularly important for U.S. taxpayers, right? This idea that you can obtain a life insurance product and capture, right, the gains with, from the investments within this product, tax free to the extent your life insurance is U.S. tax compliant, for federal tax purposes. And one of the reasons I think private placement life insurance is a really appropriate opportunity is because in order to create a U.S. tax compliant life insurance product, they have what's called an insurance dedicated fund. And this insurance dedicated fund, as long as it's properly diversified, enables the policyholder to capture the gains of the investments inside the insurance policy tax free. And PPLI, since it's really kind of geared toward high net worth or ultra high net worth individuals, there is a little bit more tolerance in terms of the types of investments that could be wrapped up in this type of an insurance product. And so, I think the idea there would be to incorporate different types of investments within the crypto space, crypto denominated or token, purchases, or venture type opportunities within a life insurance product that enables people to capture those gains in a much more tax efficient manner than we're all capable of doing right now in the U.S. So I think to your point, there is an element of life insurance is probably a good idea just as a kind of normal course of personal risk management for your family. But then there's also the idea on the financial side of things where if I'm really making significant moves inside an industry that we think is going to continue scaling generally in an upward direction, how do we position ourselves to take advantage of some of those opportunities in the most tax efficient manner possible? And certainly life insurance products properly structured can put people in a potentially more favorable position.
I like it.
Having said that, I'm not a life insurance guy, and I'm definitely not a tax advisor. So take that. Right.
Right. Got it. Thank you. Thank you for your opinion. Thank you. Appreciate it. So I really enjoyed speaking with you today. Thank you very much for talking to me. I learned something new all the time, but this is really fun. And I have one last question for you. Is how can people find out more information about you, about Realm Insurance? How can they start to use your products? How can they do any of that?
Yeah, I think the best place to go is our website, www.realminsurance.com. We're also on LinkedIn and Twitter. But that's probably the best place to land. You can learn about what we've been up to, what we're doing, our products, more specifically, the individuals on our team, their sector expertise and underwriting capability. But I think the most important thing generally is we're supportive of what's happening across the digital asset and Web3 ecosystem. We want to make sure we're building aligned products. We want to make sure that we're, as we say, here for a good time and a long time. So it's been great being here. Definitely appreciate the opportunity and the questions.
Awesome. Thank you very much for your time today.
All right, Jamil. Have a good one.